Good morning, a warm welcome to you. This is Sage. You're watching Kalkine TV live from the Sydney studio, and this is the Global Markets Roundup show. Let's take a glance at how the global markets rounded up globally, starting from the US market. The global shares edged lower on Tuesday as new coronavirus outbreaks in Asia vied with strong US consumer confidence, and as investors speculated about whether the Federal Reserve would accelerate its timetable to end the easy monetary policy. MSCI's All-Country World Index, which tracks shares across 50 countries, shed 0.14% as declines in Asian equities undercut new highs in European and the US markets. The Nasdaq closed at a record high on Tuesday, lifted by Apple Inc. and other technology stocks after an upbeat consumer confidence report. And Dow Jones Industrial rose 20.24 points, or 0.06%, to reach 34,303.51. The S&P 500 gained 2.05 points, or 0.05%, to reach 4,292.66, and the Nasdaq Composite added 28.67 points, or 0.2%, to reach 14,529.17. The blue chip index registered their fourth, and tech-heavy Nasdaq registered their sixth consecutive record closes on Tuesday as the tech stocks dominated the session. Let's look at some important economic data announcements now. Investors appeared bullish in the recent sessions as inflation concerns began to wane, expecting a strong economic rebound would balance out the price increase. And besides, they were also anticipating optimistic June employment data from the Labor Department this week. Labour market recovery is central to the Federal Reserve's short-term monetary policy, which it hopes to recalibrate in the second half of 2023 after reviewing the inflation situation. However, an ongoing surge in oil prices could worsen the consumer price woes. Oil price had fallen by 1.75% on Monday after registering their highest increase since 2018 on June 26th this year. And the OPEC oil cartel and its allied members were expected to announce this week an easement to its earlier production cuts, which is likely to give fresh impetus to the industry amid the soaring oil demand. In Tuesday's session, the technology and healthcare stocks were the top movers on the S&P 500, whose 4 of the 11 critical segments stayed in the green zone, and conversely, the utility stocks were the bottom movers. Moving on now to the newsmakers. The shares of pharmaceutical company Moderna Inc. rose 5.62% after its COVID vaccine showed promise against the new Delta variant, first identified in India. And the United Airlines stock declined marginally by 0.70% at the market close after it confirmed the largest ever plane order to Boeing and Airbus for post-pandemic growth. UAL will purchase 200 737 MAX jets from Boeing and 70 SEA 321 Neos from Airbus for over $30 billion. And the shares of Boeing Co fell by 1.63%, and Airbus SC also fell by 1.93%. Investment bank Morgan Stanley's stock jumped 3.34% after it doubled its quarterly dividend on Monday. And additionally, the bank said that it is planning to buy back up to $12 billion worth of its stocks. Visa Inc. rose 1%, and Goldman Sachs Group Inc. stock gained 1.06%. And now, before we look at more trending updates, it's time for a short break. Crypto talk by Kalkine. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by Kalkine. Welcome back, I'm Sage. Let us now look at the important market updates from the US markets. In the technology stocks, Apple Inc. gained 1.22%, Microsoft Corp rose 0.95%, while Facebook Inc. shed 1.18%. Sony Group Corp advanced 1.42% and Zoom Video Communications Inc. advanced 1.20% as well. Intel Corp, however, declined by 1.51%. The shares of ExxonMobil Corp fell 0.52%, PetroChina Company Limited dropped 3.30% and China Petroleum and Chemical Corp tumbled 3.14%. Total Energies SC shed as well 0.96%. Canadian Natural Resources Limited, however, advanced 0.88%. Now, in the utilities sector, Next Era Energy Inc. declined 1.36%, Duke Energy Corp declined 2%, and the Southern Company declined 1.65%. Dominion Energy Inc. ticked down 2.36%. Now we'll take a look at the futures and commodities. The gold futures were down 1.07% to reach US $1,761.60 per ounce. Silver decreased 1.35% to reach US $25.87 per ounce, while copper fell 0.49% to reach $4.2575. Brent oil was down 0.04% to reach US $74.64 per barrel, and WTI crude increased 0.73% to reach $73 US and 44 cents. And moving on to the bond market, the 30-year Treasury bond yields was down 0.59% to 2.086, while the 10-year bond yields decreased 0.33% to 1.473. The US dollar futures index rose 0.23% to $92 US 0.085 cents. And this is how the US market fared last night. It is time for another short break, and after the break we'll look at the UK stock market.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Welcome back, I'm Sage and you're watching Kalkine TV. Let's take a look at the last updates from the UK markets. And now looking at the Europe and UK market updates, European shares ended higher on Tuesday after the data showed economic sentiments improved sharply in June, while Adidas lifted the German index with a share buyback plan. The Pan-European Stock 600 closed 0.3% higher at 456.37 points after data showed Eurozone economic sentiments hit a 21-year high in June as a steady vaccination program saw several economies reopen. Moving on now to the UK markets, the London markets traded in a green zone boosted by the house building stocks. And moreover, the Bank of England had reported a rise in the UK mortgage approvals to 87,500 during May 2021, while it was 86,000 during April 2021. And according to the nationwide survey, the annual house growth rose to around 13.4% for June 2021, increasing from approximately 10.9% achieved during May of 2021. Moving on now to the newsmakers in the UK markets. D4T4 Solutions shares plunged by about 12.03% after the company had posted a drop in profitability during the financial year of 21. However, the company managed to show growth in the top line revenue and subsequently raised the final dividends. Next up, UDG Healthcare stated that it received an increased takeover bid from Clayton, Dubilier and Rice of around 1,080 pence per share. Moreover, the shares went up by approximately 0.47%. Also making the news, IWG shares rose by around 3.17% after the recent press speculation that the company was in discussion with the US private equity player CC Capital Partners for a potential takeover offer. United Utilities Group shares dropped by around 0.97% after Morgan Stanley had downgraded the company to underweight. And well, that was the UK share market information for you. And now let's quickly glance at the Asian markets, starting with Japan, where the Olympics are being held this year. Japanese shares slumped on Tuesday with the weaker cyclical stocks outweighing gains in technology firms as outbreaks of the highly contagious COVID-19 variant Delta raised concerns about the hindrance to global economic recovery. The Nikkei share average fell 0.81% to reach 28,812.61, while the broader Topix lost 0.82%, down to 1,949.48. On a similar note, China stocks fell on Tuesday on concerns the infectious Delta virus variant could assuage global economic recovery, while investors refrain from placing the big bets ahead of the US jobs data, which could sway the Federal Reserve's policy outlook. And the blue chip CSI 300 index closed 1.2% lower at 5,190.54, snapping a 5-day winning streak, while the Shanghai Composite Index shed 0.9%, down to 3,573.18. Moving on now to the next Asian country, South Korean shares ended lower on Tuesday, hit by worries that a more infectious strain of COVID-19, the Delta variant, might derail the economic recovery, while investors awaited the US data later in the week. The won gained while the benchmark's bond yields fell. And the Kospi closed down 15.21 points, or 4.46%, at 3,286.68. And that's it for the UK stock market. Stay tuned as we shift our focus to the Australian market just after this short break.
Tune in to get the latest information,
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Welcome back. You're watching the Global Market Roundup show. This is Sage, and in this segment we take a glimpse on how the Australian market fared last night. Australian shares are poised to open higher on Wednesday, taking cues from a strong overnight session on Wall Street as gains made in heavyweight technology firms propelled the S&P 500 and the Nasdaq Composite higher. The Australian and New Zealand dollars extended losses on Tuesday, however, after cautious investors cut down on risk amid concerns over the rising COVID-19 cases, leading to strengthening of the greenback. And the Aussie dollar weakened 0.1% to US 0.7557. Falling for a second consecutive session, in fact, and the New Zealand dollar was off 0.1% from its previous closing to reach US 0.7032. And now let us take a look at how the tech shares are likely to perform today. Technology shares have been rising since the last few sessions, and today the trend seems to be resuming on the ASX as the tech-heavy Nasdaq 100 has marked a new all-time high in the US, led by demand for the technology shares. The Australian technology shares such as Xero Limited, Afterpay Limited and Zipco Limited could trade higher today. Moving on now to the oil space. On Tuesday, the crude oil prices rose on the back of broad hopes for a demand recovery. The comments from OPEC Secretary General overshadowed travel restrictions due to new COVID-19 outbreaks also helped fuel the rally. And Australian energy shares such as Viva Energy Group Limited, Origin Energy Limited and Santos Limited could show some recovery from their losses on Tuesday. And now we'll take a look at the shares in the yellow metal space and how they're likely to perform. On Tuesday, the gold prices fell to their lowest levels since mid-April 2021 as the US dollar gained ahead of this week's US jobs report, which is expected to add new jobs and could cement the Fed's recent hawkish stance. The Australian gold miners such as Northern Star Resources Limited, De Grey Mining Limited and St Barbara Limited could continue their losses from the previous session. And finally, let's glance at the metals and mining space. On Tuesday, the iron ore futures fell, weighed down by the steel demand in China reverting to a lower level due to threats of intervention by the Chinese government seeking to put a leash on the high prices. And the most active September futures contract for the iron ore on China's Dalian Commodity Exchange closed 2.7% lower reaching 1,153 yuan, which in US terms is $178.57 per tonne, after 4 straight sessions of gains. And copper prices also fell for the 4th consecutive session on Tuesday as the surging COVID-19 cases strengthened the US dollar and cast doubt on a speedy recovery of some economies. In addition, the plentiful supply of industrial metal also weighed down on its price. The 3-month copper on the London Metal Exchange fell 0.3% to reach US 9,352 a tonne. That was current at 4:51 p.m. GMT, after falling as low as 9,236 US earlier in the session. Local miners such as BHP Group Limited, Rio Tinto Limited and Fortescue Metals Group Limited could trade lower today. And thanks for joining us on that report. That's all for now on how the market closed last night in the US, UK, Asia and Australia. But please stay tuned with Kalkine TV for more market updates. And Sage signing off.